Hi, it's Jay Green with GW Private Capital in Whittier. I want to explain to you trust deed investing and how private investors can earn high annual returns by funding California private money loans. A trust deed investment and private lending go hand in hand. Private investor monies are used to fund private mortgages, and when they're funded, they become a trust deed investment. GW Private Capital specializes in arranging private money loans for residential, commercial, fix and flips, construction. We do a lot of second mortgages where someone will own a property and they want to borrow a second mortgage as small as $20,000, $30,000, $40,000, $50,000, and we'll make those loans. We specialize in business, investment, non-consumer loans, meaning these loans are not made to pay off credit cards. They're typically not made to buy a primary residence. They're used for an investment, business purpose, non-consumer. And there's a lot of applications for that. Property owners that are building ADUs, that's an investment purpose. We can lend mortgages for that, first mortgages, second mortgages. When I talk about a second mortgage, meaning there's an existing mortgage in place and we're lending the mortgage behind that. The reason why is so the property owner doesn't have to pay off the existing mortgage, because a lot of times first mortgages have lower rates, especially if it's a good bank loan where the rate's like 2, 3, 4, 5%. Why pay off that loan with a higher interest rate private money loan? You can just get a second mortgage. So we do a lot of seconds. People, borrowers, property owners, realtors, loan brokers call GW Private Capital and they'll want to borrow a small amount of money to finish a project. They've run out of money. They have a construction loan and the owner or contractor or developer, they can't access their construction loan, so they'll come to us, Jay, I only need 30, 40, 50,000 to keep my project moving forward. I can make those loans at GW Private Capital fairly easy. We'll fund those loans using our own money, and if we're not funding the loans ourselves, we have hundreds of local private investors that fund these loans. They're great investments. We're usually funding the loan on one property. We just funded recently a $275,000 first mortgage on 3 units in Fontana. Borrower was left this property by one of his best friends, and he needed the money to pay off some existing loans that were on there and use the rest of the money to complete the construction. The property would be valued at about $700, $750 after we finished the loan. The borrower didn't have the best of credit. He couldn't get a loan from anybody else. So this is a great investment for our investors that funded it. We had 3 private investors that funded the loan. We got it done in a few weeks. The borrower is extremely happy. We made the process easy. Months ago, I just did a $30,000 loan for a property owner that was making some repairs to their property. They had like $1 million first. Property was worth like $2 million. A lot of times our first mortgage yield, typically in the 7, 8, and 9% range, sometimes in the 10% range for first position mortgages. And our second mortgages are usually 10 to about 14%. I love funding second mortgages myself. I fund them through my IRA. I get really nice returns, and then the borrowers, they get access to this money that's very easy to access. Private money loans aren't as cheap as going to get a traditional loan or going to get a line of credit from a bank. If a borrower or a flipper or an investor can go that route, get cheaper money. Private money is just an option for flippers, for buyers, for contractors, for investors, for realtors. They're great for flippers that just want to get in and out of a property. So the interest rate's not as critical because these private money loans are typically going to be paid off relatively soon. What are some of the requirements to become a trust deed investor? Well, you have to meet the suitability requirements of the Department of Real Estate. And normally they're a $250,000 net worth or $65,000 annual household income. But I'll tell you more in detail if you want to know how to qualify to be a trusted investor. You don't need to meet the requirements of as an accredited investor as set forth by the SEC, where it's like $1 million net worth. And I can tell you what documentation is required. Do fill out an application and a questionnaire required by the Department of Real Estate. How we work at GW Private Capital is we receive private money loan requests daily. And then what we do is we do some preliminary vetting. We find out about the borrower's credit, their income, their story. What are they using the money for? Are they buying a property? Do they own this property? Do they own other property that we might be able to use as possibly additional collateral? Every investment is secured by a deed of trust. A trust deed investment is comprised of two primary documents: the promissory note and the deed of trust, also known as a trust deed. A trust deed is what gets recorded at the county recorder registrar's office, and it becomes a matter of public record. On our trust deed investments, we always obtain title insurance, and we have a title insurance company record the deed of trust. So that way it's insured with a title insurance policy. The reason we do that is if there's identity theft or fraud, if there's taxes, if there's liens that show up after the loan's made, if anybody contests additional liens or encumbrances, the title insurance company is ensuring that our deed of trust is in a specific position that the lender and we have instructed the title insurance to record. So for example, if someone in Whittier owns a $500,000 property and they owe $250,000 and they want to borrow $50,000 second, we're going to open escrow and order a title insurance policy. We're going to do all our paperwork and underwrite the loan. The owner or borrower is going to sign the loan documents for the $50,000 loan. Interest, like first payment letters, loan purpose letter. There's a lot of documents that we require each borrower to sign. So the deed of trust is the primary document that goes to the title insurance company, and they record and they ensure that that document, the deed of trust, is recorded in a specific position against the property or title. So in this case, we're recording a $50,000 second behind a first mortgage. So we'll obtain the details of the first mortgage. We want to know when's the balloon payment? When does the loan mature? What are the payments? What are the terms? What's the interest rate? Does the payment include impounds for like taxes and insurance? Investor, lender has to step in and take over payments of the first. They know what that responsibility is going to be. For example, if the borrower were to fall behind on the payments, we would know. And the reason we know is because we record a request for notice that if the borrower fell behind on the first payments, we'll be notified legally because of recording a certain document called a request for notice. We want to know, how is the loan going to be repaid? Is the borrower going to be refinancing? Are they going to be getting an influx of capital through their business or some other means? Are they going to sell the property? So we're always looking for a story, the exit strategy, as it's called in our business. Is the trust deed investment going to be repaid? Most of our trust deed investments or private money loans are short term, usually 6 to 12 months. Sometimes they'll go longer. Sometimes we have trust deed investors or lenders that want loans that are going to be in existence a little bit longer. So sometimes we do make loans that are longer than 12 months, but typically most of our loans are short term. They're really satisfying a need for immediate capital. There are certain borrowers that just cannot go to a bank. Maybe they're self-employed, maybe their credit's not the best. Maybe they have a time constraint where they need to buy this property and they can't spend the 30 or 45 days to go to a traditional bank. So they'll go to a private lender like GW Private Capital for speed and convenience, reliability, dependability, that we're going to get the loan funded. With regards to handling investors' capital, we do not touch your money. When the loan's ready to be funded, when we need the capital to fund the loan, you wire those funds to the title insurance companies. It protects you, the investor. I'm not handling your funds. The borrower signed all their documents. We have the insurance. We have all the document we need. You receive the disclosures that the Department of Real Estate require from us, We give you all the originals, the original deed of trust, promissory note, all the original loan documents signed by the borrower, and then we give you wire instructions to send your money to title. The title insurance company receives it, the escrow will verify the funds are in, and they'll make sure the file's ready for recordation and final closing. Escrow officer will send to the title insurance company the original documents that need to be recorded, like the deed of trust, all riders that go with that get to be recorded. And then once those are recorded, then the escrow settlement agent or escrow officer can settle the file, and that's really when the loan is funded and closed. And you'll see that on a settlement statement. And then any pro rata interest that's due or any fees that are due the investor, those are sent to you in a check or wired back to you. You give instruction to escrow, and then all those funds are reflected in the settlement statement or the HUD-1, and you'll see $50,000 loan, and you have debits and credits, the borrower name, the address, and it'll show all the costs, and then if taxes were paid, insurance, if there are any mortgages we were paying off. So on that settlement statement, you get a copy of that. So when the loan is closed, servicing is set up. Now you as a trustee investor, you can service your own loan. You can send the payment letter to the borrower, but then you're responsible for issuing 1098s at the end of the year. So sometimes using a third-party servicer is very convenient, and they don't cost that much. Third-party servicing company, and then they're sending out the statement to the borrower. They're on top of whether the borrower is making the payments or not. And they're gonna follow up and contact the borrower if the mortgage payments aren't being made. Really the monthly payment made on the loan, let's say it's a $50,000 second mortgage and the payment's $550, the $550 payment's gonna be due on the first. There's a 10-day grace period before a late charge might be assessed. These trustee investments are recorded against specific properties in California. We don't pool your money. You know exactly where you're investing your $20,000, your $30,000, your $2 million. It goes into a specific property or into multiple properties that protect your investment. You know where your money is being invested and specifically what it's recorded against. And you get to go out and look at the property, you get to investigate the borrower. One of the biggest really factors of risk is the amount of equity in a property. And that equity is what protects you in the event of something happens and the borrower doesn't repay you. I'm gonna tell you a little bit about loan to value or CLTV or combined loan to value and what that means. Let's go to a scenario, a property in Whittier. Say it's worth $600,000. And let's say that the borrower owes $250,000 and they're borrowing a $50,000 second. So you have a first mortgage of $250,000. We have our new loan of $50,000. So the two together equal $300,000, and the value of the property, the fair market value, is $600,000. So you take the $300,000, you divide it into the $600,000, and that's a 50% loan to value. The lower the loan to value, or in this case, combined loan to value, is when there's a first and a second, or a first, second, and third combined loan to value. The lower the loan to value, the more equity, typically the lower the risk. You're gonna know exactly what your loan to value is, or your combined loan to value, and how much equity is protecting your trust deed. Investing in trust deed have a lot to do with not just the borrower and their good credit or bad credit and what kind of character they are, but how much equity is in a property. And that's very important, is what is the loan to value, how much remaining protected equity is in the property, where is it located? If you're lending them $50,000, are you going behind a $250,000 loan? Are you going behind $1 million loan on a property that's worth $2 million? All those factors matter. If you want to learn more, give me a call. Jay Green, GW Private Capital here in Whittier, 714-747-1912. You can use your pension plans, self-directed IRAs, KIOs, tax-deferred investment vehicles like self-directed IRAs, defined benefit pension plans, 401ks. I've been lending private money for more than 30 years. We lend money all the time here, primarily in Southern California, to great properties. I think trustee investing is a great way to get amazing returns for an investment that is not so volatile, that you can understand, that you can control. We're providing a great service to a lot of our borrowers. We're providing much needed capital for people that need fast money or that don't want to go through the process of waiting, 30 or 40 or 90 days for a loan. We're providing a great service to realtors, loan brokers, borrowers, flippers, real estate investors in California, developers, contractors. You're really helping people out, and there's a lot of great borrowers out there. Private money is not just for people with bad credit. I use private money myself quite regularly for my own investments as a tool to take advantage of investment opportunities. A bank can't move that fast. So if I need to close fast, I turn to my trusted investor. They're reliable, and that's what we provide to borrowers in California, is that reliability, that dependability, and people appreciate that. So if you want to learn, give me a ring and I'll tell you more about how to get involved and how we work. Jay Green, GW Private Capital, 714-747-1912. Give me a call and become one of our GW Private Capital trusted investors. And if you like this video, please subscribe to my channel and hit that like button.